Good morning, traders, and welcome to Phoenix Blue's morning update. My name's Nishil Patel, and I'm going to be giving you Phoenix Blue's morning update for today, Thursday, the 3rd of November 2016. Cracking straight on, what we're going to do is we're going to have a look at the global indexes, see what's been happening. As we can see, the American sessions have finished off on a low yet again, S&P being one of the biggest losers there. As we can see, but the Dow Jones and the Nasdaq according also have taken a bit of a hit. The Nikkei was closed off because of Japanese bank holiday, so they haven't been trading overnight. But the Hang Seng, as we see, has similarly taken a drop over the last day, and also has the Australian index, the ASX 200. So what we've seen is we've seen a shift of sentiment from investors predominantly and moving straight to the safe havens, and that's something that we've really seen for quite some time, and we've noted that beforehand. I'm going to show you that in the charts next, but moving on to what we're expecting for today in terms of news announcements. As I've already said, we've got a bank holiday in Japan, so the stock market out there is closed. We did have trade balance report out on the Australian dollar, not really faring too much, but the key data for us today is really going to be on sterling. As we see, we've got a glut of data coming out, especially the official bank rate coming out later on this afternoon GMT, so 1 p.m. GMT. We do have the governor from the Bank of England also speaking, and then that's followed up by the unemployment claims coming out a little later, half an hour after that, which is a fortnightly announcement. Always usually the day before NFP. So we've got that on insurance claims coming out on the USD. We also have ISM non-manufacturing PMI. Remember, we did have PMI earlier out in the week on the USD, which was positive, showing us potential growth, especially in the sector. But we do have non-manufacturing coming out later on. Again, that's obviously going to have a knock on onto the markets. Moving straight on forwards, as we are talking about the USD, let's see the state of the US dollar right now. As we can see here on our chart, just having a look at the dollar index on the daily time frame. Yesterday we had a low coming down to the 97, come down a little lower now. Slap bang on the 97. Hasn't come as low as testing my level of support resistance that I've highlighted on my chart, 96.84, but has rested slap bang on 97 on the dollar index. Primarily being forced down, and a lot of people have been unaware of this, primarily being forced down from a few major players. Let's not forget the dollar index and the composition of the dollar index, and the weighting on every instrument that the dollar index takes account of, and one of the strongest is the euro. So I'm just going to move on to the euro next. As we can see on the euro right now, it's high testing on today's daily time frame. I have put myself in a very small trade for the sake of one of our delegates, just to show what we should be looking for. The perfect entry was off the high of this particular bar, which many of you would have found, because it actually intersects a few Fibonacci points on the daily and also on the weekly, and there's also a level of support and resistance there. It was actually, in fact, yesterday's R2 on the pivot, so quite interesting there. Potentially what we've seen is, well, not potentially, what we have seen over the last few days is we've seen a lot of strength on the euro, and that strength on the euro primarily is driven my dollar index down, even more so than what was expected. So it's the strength on the euro. In turn, what we've seen that the euro has also made gains on the pound as well. So if you have a look at the euro GBP chart, you will also see similar outcome. Now, yesterday we did have data coming. Well, we did have an announcement from the FOMC after 2 days of meetings with them, and the FOMC have rested on what was predicted of not making any rate not making any decisions on their rate, being so close to the US presidential elections. And we do have a situation right now where investor confidence are taking, where investor confidence is low, and investors are taking to the safe haven, so they're moving to the yen, which plays very much into our hands on the trade on gold and also on the Japanese yen. At Phoenix Blue, we were looking at a short trade on the yen, and as we've seen, after breaking that 104, hitting the 105.50 area, as we were looking at towards the end of last week, breaking straight down and then well below the 103 level right now, resting just below the 103 at present, coming down and hitting a low on this time frame, on this daily time frame of 102.50s. As we can see, it's find a certain amount of support there before bounding back off again. Moving on forward, the next trade I want to just have show you guys the next trade, which also ties in with our risk off sentiment. I'm just going to move straight over to gold. In fact, I think that's probably the best thing to do. I'm just going to quickly find that on this chart. There it is there. So just have a quick look at gold. As we've seen that gap being filled completely. We've seen the movement from that 23.6, from that 1264 level, which we were in a trade long, to that 1304, literally breaking that 1304 and just above it, a wonderful little trade there. I say little, but what we've got is we've got almost $40 that it's made up in terms of ground there per troy ounce on gold. So it's done well. Gold rebounding right now, obviously correcting itself off that initial move. As I said, we have seen a lot of investors pull out from the stock markets, and that's what we've seen as I showed you on the very first slide that we showed you, that the S&P was down quite considerably. A lot of our indexes are down as investors are pulling their investments and moving to safer investments. And I'm just going to have a quick look at the S&P just to show you the state of where the S&P is at right now. As we can see on this daily time frame, again, the S&P is just floating above the 2,100 level, so at 2094. Another bearish day, and we will be matching the consecutive losses on a day per day since 2008 on the S&P, which is quite a big deal in respect to what's happening. Obviously, again, with what's happening on the US presidential elections, it's going to have a knock-on effect. We do have NFP tomorrow, and so there's a huge amount of data coming out, and still left to come out, I should say, despite the data, despite all of the announcements that have come up this week. There's a lot going on. I also want to show you the FTSE. Have a quick look at the FTSE. FTSE's right now bouncing off what we can see is a 618 fib, probably pushing back closer to that level of support and resistance highlighted at the 69.42 area, which is also a 382 on the fib. But you know, no trades. I'm not going to be looking to trade this at all. I know many of us will sideline ourselves until data has come out. Last chart I want to have a quick look at is WTI. WTI right now is, in fact, let's move over to this chart here, which is a clearer representation of my analysis. Having a look at this, WTI right now, just bouncing off that 23.6, resting at 45.83. This has been a great trade for us here at Phoenix Blue, trading it short, double topping off my 52 level, breaking down through that key $50 per barrel, and then storming down, breaking through the trend lines as we expected, probably encountering some problems as we expected, particularly around key moving averages and key trend lines, and resting itself just below that 45 level. We are looking for it to get lower, but looking for a nice viable trade entry right now. Did have data come out on WTI yesterday, or come out on oil yesterday, showing inventories for those commodity traders. I'm sure you paid attention to them as well. And in fact, I'm going to leave off on our final chart on our local currency here in the UK. Looking at cable, as we can see, this sterling has gained a little ground here, coming out of that area of consolidation, breaking clearly out of that. Has done that previously, as we see, towards mid-October, and then push straight back into this area of consolidation, literally just using the momentum of the dollar index to drive it out of that area of consolidation, but still has had no grounds to be able to really rock it off like the euro has, and like many of the other currency pairs have, to take advantage of that dollar weakness. Okay, we are expecting the dollar to probably push on a bit, as we've already seen, bounce off that 97 right now. But with the US presidential election so close, NFP data and the final NFP data coming out tomorrow at 8:30 Eastern European time, so afternoon here in Europe. We'll probably expect some kind of movement again. Guys, for those novice traders, I would tell you to sideline yourself and wait till all of this information has dissipated, or all of these announcements have dissipated, and also the US presidential elections have passed. There are some key trades that we are placing over this period. If you'd like to take advantage of them, feel free to pop us an email at info@phoenixblue.co.uk, and we will be happy to help you out. So any kind of interest, feel free to send us an email at info@phoenixblue.co.uk. Alternatively, visit our website, and there is a form there where you can fill in. Until next time, traders, happy trading. Take care. Goodbye.